Hello, everybody. I hope you guys are having a fantastic day. Lo and behold, we're actually having a very good day with cryptocurrency up 3.5%. The S&P is now up 1.33%. The Dow Jones is up 0.6%. And the NASDAQ is down 5%. No, I'm just joking. The NASDAQ is actually up 2%. So the question is, what gives? Obviously, the elephant in the room is the CPI data, the inflation data. I filmed it live earlier today. We came in at 7.1%, which is a 0.2% less than expected. So we came in softer, a softer landing than expected. Inflation went up 0.1% in November, following a 0.4% raise in October. So this is a very, very welcomed piece of news. Practically everything on the CPI data, everything on the metrics was going down. Practically, there were some things that went up. There were some things that went down a little bit more. Gas services went down for a total of 3.5%, while fuel oil went up 1.7%. Now, I know you guys are going to say, but Adam, you said virtually everything went down. Yes, fuel oil did go up. However, the month before in October, fuel oil was up nearly 20% at 19.8%. So going up 1.7% from 19.8% is actually pretty good. And it doesn't just stop with inflation, the regular CPI, right? Because there's regular CPI and then there's core CPI, right? You guys remember that? Core. And what exactly is core? Core is inflation minus energy and minus food. I don't personally agree with that. It does not make sense to me. I guess they're saying that core is everything except for what you can't live without, and you must have energy for, to live, and you must have food to live. Okay, it is what it is. But even core is going down. Core came in at 6%. We actually rose 0.2% following 0.3% in October. So we're actually going up less than expected. We're going up, it's actually really good news at the end of the day, right? It's not bad at all. So the question is this: what the heck happens from now, right? What the heck is going to happen now, and how do we prepare for this, and where's the market going to go? When I was doing my live stream, a lot of people asked me, hey, Adam, can you please make a follow-up video? And I will make a follow-up video. This is it right now. I used to make these videos a lot more in general, but it just seems people don't really like to watch these videos. I'll try to add them in more. So while you're here, and if you like these type of market updates, please give me the like, share, subscribe, and the comments down below. It really does help me with the almighty YouTube algorithm and to actually get found and people to actually watch my videos. So I'll definitely appreciate that if you take a moment right now to actually click that while I drink my coffee. By the way, if you guys want to support the channel, you want merchandise, this is one of my crypto cups. Eat, sleep, algorand, repeat. I do have Hedera gear. I do have regular generic crypto gear, and I have some other gear. If you guys want to support the channel, I do have a link down below. And I wanted to shill a poker tournament. I'm having a free roll poker tournament this Thursday at 8 o'clock Eastern time. It's completely 100% free. I do have a link down below. Just click on the link. It's going to be in the description. I'm giving away 500 algorand and 2,000 Hedera. This is coming out of my pocket because I always give back to my community. I've been doing this for years, and it seems that people just don't notice. Anyways, if you want free shit, sign up with the link down below. Now, let's talk about the CME futures. The CME futures is basically a bet to see what's going to happen with the Federal Open Market Committee. The Federal Open Market Committee is meeting tomorrow morning, and they will decide how much they're going to be raising the interest rates by. Is it going to be 50 basis points or 75 basis points? After today's inflation report, there is an 80% chance that it's going to be 50 basis points, and there's a 20% chance that it's actually going to be 75 basis points. So the question is, Adam, if inflation is going down, how? Why would there even be a chance? Why is there a 20% chance that we might be raising by 75 basis points? Because remember, we already had 475 basis points. This is one of the most aggressive rate hikes, period. Depending on what metrics you're looking, this could be categorized as the most aggressive rate hikes in history, or definitely most people are considering this the second worst time for interest rates ever. So I'll tell you why. There's basically two things that you need to pay attention to, and then a third thing that Jerome Powell spoke about in his speech before. The two things is the jobs report, and the second thing is the PPI. So the jobs report actually came in on par with what was expected at 230,000 jobs, which is slightly up from the month before. Total unemployment is near record lows. So the thing is, for every single one job that we have 0.6 people looking for work. So imagine that. Imagine you have 1,000 jobs, but only 600 people are looking for the jobs. What happens? You have to pay more money to get those people to come to your job. Because if you have two jobs the same and I'm paying $100 and you're paying $120, people are going to go to you. So you have to raise your prices. If we had one person per one job, you don't have to do that. It's a very fair wage. So one thing is unemployment, and I'll get to why this is so important in just a moment. And the second thing is actually the PPI report. So the PPI report is the producer price index. That's like the wholesalers inflation. And the wholesalers inflation actually came in hotter than expected. So CPI came in lower, PPI came in hotter. PPI came in at 0.3% when we were expecting 0.2%. Total PPI is 7.4% wholesale inflation. And core PPI, yes, there is core for wholesalers inflation as well, is at 6.2%. I'm going to correlate this to a speech that Jerome Powell did around a month and a half ago in just a moment, and I'm going to break down the three areas of inflation. Actually, I'll tell you what they are right now. There's core good inflation, there's housing service inflation, and then there's core services other than housing. Core services other than housing actually accounts for around half of core inflation. I'll get to that in just a moment. I just want to give you some stats when it comes to real estate because that's going to literally beat everything when it comes to the second part of inflation, which is housing service inflation. Mortgage rates currently 7%. The median home sales remain at around 454,000. Existing home sales are down nearly 50%, and housing inventory is at a one-year high, reaching where we were around a year ago at 1.2 million. What does that mean? Housing inventory is going up. During coronavirus, housing inventory was going down, or let's say over the last 6 months ago, 7 months ago, 8 months ago, 5 months ago, inventory was low, which means we didn't have enough homes, which means if there's 100 people looking for homes, there's 80 homes on the market. Now, for every 100 people that are looking for homes, there's 120 homes on the market. I'm just giving you a generic number, but that's what it means. So we have near record one-year highs of homes. The price of homes, however, is staying strong at around that 450,000 mark. So what's going to end up happening? People are selling their homes, but they're going to have to lower the price the same way I just explained unemployment, right? So if you have one person looking for a job, but there's two jobs, you have to pay more. Well, if there's one person looking for a home and there's half a home for every one person, well, that person needs to spend a lot of money. But now if there's two homes for every one person that's looking, well, those home prices have to come down. So with high mortgage rates and with large inventory, I believe that home prices can go down. And this is very, very important for the next part of this video. That's why I'm explaining it to you. As I said, there's three parts to inflation. I'm going to read you a quote. This is directly from Jerome Powell. This is what he said. Core goods inflation has moved down from very high levels over the course of 2022, while housing service inflation has risen rapidly. Inflation in core services, except housing, has fluctuated but shown no clear trend. And then he discusses the items. This is what he said. So you have core goods, you have housing services, and then you have housing services minus housing. For core goods, there was a bottleneck because of coronavirus, all the shutdown and things like that. That bottleneck is easing up. And there's a surplus of goods that are stocked by big box retailers like a Costco, like a Walmart, and dozens of other retailers. So core good prices are most certainly going down. Now you have housing. That's why I wanted to explain to you what's happening with housing. Jerome Powell in his speech actually came out and said, hey, housing is a very lagging indicator. It's always late to the party. And the way we gouge housing is leasing renewals. So leases are going to expire right now, and there's going to be new leases, so you can understand what's happening. But he says housing market is not showing any signs of letting up. Again, it's lagging. I believe in 6 months from now, housing is going to... And I know this from my personal experiences as I do have retail, as I do have real estate where I'm selling properties and I'm renting properties. It is harder to find renters. People want better deals. And to sell homes is becoming increasingly more difficult. Banks are not giving as much mortgages. Now, all of this is lagging. Everything takes time because if people are applying for a house today, you're only going to see that they got denied 3 months from now because there's so many things that can go wrong in that 3-month process, approximately, of closing. Finally, the labor market is what has to do with the final cost of services minus housing. Why? Labor market, if there's a tight labor market, which means that there is barely any unemployment. The wages are high. Because wages are high, service costs are high because you as a boss are paying more money. That's what I was explaining in the beginning of this video. And because that's happening, cost of services are really high. So he says this is not letting up because of very low record unemployment. That's the problem. And this contributes to around 50% of the core inflation. The reason why I'm telling you all of this is to correlate, hey, inflation is starting to go down. That means it's kumbaya and everything is great. How is it possible that they're going to be raising by 75 basis points tomorrow instead of 50? I think it's going to be 75 basis points. I think it's going to be because the unemployment didn't come in as soft as he wanted it, and the PPI still came in hot. And I believe this is going to be the last chance that they have to actually raise by 75 basis points. Now, I could be completely wrong. I think next year they will actually stop raising, and they're going to go to neutral. Guys, let me give you the stages of the Federal Reserve. You have the neutral rate, then you have the increase of rates, then you have a less aggressive increase of rates, then you have a neutral again, and then you have a reduction of rates. After the reduction of rates, the cycle starts again to a neutral, raising rates, raising not as aggressive, neutral, reducing, so on and so forth, etc., and etc., and etc. Right now, we have increase of rates, and we are right about to be not as aggressive rate hikes, which can be either tomorrow or the next meeting. I think it's going to be the next meeting. After that, we're going to have a few meetings that we're going to have 50 basis points, probably 25 right after that, depending on how the inflation data comes in, especially the housing market. The housing market is what can tank us. After that, there's going to be a pause, a neutral, and then there's going to be a reduction of rates. After the reduction of rates, anything can happen. The market can rally or the market can dump. Historically, you can have either scenario. I am personally going to wait. I have money on the side. I am personally going to wait for one meeting after a reduction in rates. Does that make sense? I can't time the market. So I'm not going to wait until a less aggressive Fed. I'm not going to wait until the time of a neutral. I am going to wait for a time of reducing the rates. And when that time comes, I'm still going to wait one more meeting. This is my plan. Now, this plan can go up in smokes. This plan can 100% change, but I'm just sharing my plans with you right now. I hope this market breakdown helps you. I hope to see you on Thursday's 8 p.m. poker game. It's a free roll. I just want to give back to my community. Thank you so much for all of your support. Give me the like, share, subscribe, and down below, let me know what else you want to see. And down below, let me know your personal opinion about what's happening in the market. I am looking very, very strong on Tesla stocks. I think it's going to keep going down, and then it's going to make a strong recovery. I think in general, at the end of 23, early 24 is when the markets are going to start coming back. This is my personal opinion, not financial advice. Have a great day.